Welcome back to Small Caps, ladies and gentlemen. My name is Kerry Stevenson. Ooh, I'm pretty excited today. Why? Because I've got a double header for you. I have the chairman of Lake Resources, Stuart Crow, as well as Simon Francis. He is the principal of Orior Capital, which is out of Hong Kong. And by the way, just so you guys out there know, Simon has been covering, as an analyst, has been covering Lake Resources since it was 3 cents. So if you'd been listening to what Simon was saying before, you'd be a pretty happy person today. So really pleased to have you both on the program today. Thank you, gentlemen. First up, if I can start with you, Simon, you are principal of Orior Capital out of Hong Kong. And as I said in the introduction, you've been covering Lake since it was 3 cents and have been following it along the way. Today, you've released an in-depth research report. What I would like to know, first up, the lithium story and where it's going, because a lot of people are saying, oh, lithium's had its day. It's, there's a lot of companies out there. Why could it keep going? Now, in this report, you actually mentioned that you think that, you believe that the lithium sector is in a supercycle. Could you just explain to our listeners a little bit more about where you come with that supercycle analogy and where you think it's going?
Sure, that's right, Carrie. Okay, so the run-up in lithium prices that we've seen over the past year has been reminiscent of the price action that we saw at the start of the commodities supercycle from the early 2000s. 20 years ago, Chinese economic reforms led to an incredible period of economic expansion, which drove commodities demand and, of course, had an enormous impact on prices. Today, I think the lithium market looks very similar. Electric vehicles and energy storage are the new substantial, structural driver of demand. And similarly to last time round, I think the supply side is struggling to keep up. And we go through this in the report, but if anything, electric vehicles will have an even bigger impact on markets like lithium than China did on markets like copper and iron ore last time round. Lithium is a smaller market, and electric vehicles will be a larger portion of it than China was of, say, the iron ore market by about 2015. If you look at how iron ore prices reacted during the Chinese supercycle, world crude steel demand roughly doubled from 2001 to 2015, but the lithium market this decade is expected to grow 9 times. Right, so in terms of industry... Just repeat
that for me. Sorry, Simon, to interrupt you. Just repeat that for me. So the iron ore market doubled...
Between 2001 and 2015, world crude steel consumption roughly doubled.
Yep.
So over a period of about 15 years. The lithium market is expected to grow about 9 times this decade.
That is something that I'm still trying to get my head around. 9 times.
In terms of industry structure, you're seeing a much more rapid transformation in lithium than you saw in markets like copper or iron ore back in the heyday of the Chinese supercycle 20 years ago.
As a result of it growing 9 times, and you said a moment ago that supply is not keeping up with demand, does that mean that there's going to be increased pressure on the price of lithium? Because a lot of people are saying, what I'm hearing is lithium's had a very strong run up. It's going to pull back. It's going to be a softer market.
I mean, the short answer is yes, it's going to have a big impact. We're already seeing the impact. Right? Spot market lithium prices are 5 times higher than they were 15 months ago. Will prices come back down? I mean, there's normally a thing where commodity analysts like to forecast prices to return to the top end of the cost curve at some stage, usually over a relatively short period of time. And there are a number of issues with that. One is that demand is being globally legislated. it's being somewhat subsidised, and it has the support of consumers globally. So the demand outlook is strong. Can supply increase 9 or 10 times this decade in order to match demand? Almost certainly not. Almost certainly not. So prices will stay higher for longer, and I think investors can look forward to commodities analysts continuing to revise up their price forecasts and their earnings forecasts as the cycle unfolds over the next few years. If you go back to iron ore again as an example, in the 18 years between 2004 and 2021, iron ore prices averaged about triple what they were before the supercycle began. And in fact, iron ore prices have never returned to pre-supercycle levels, not in 18 years since the start of the supercycle. So yeah, I think we have to get used to the fact that we have the market dynamic has changed. Supply won't keep up with demand, and prices will remain much stronger for a much more prolonged period than people were anticipating.
Simon, did you see this coming when? Because I said earlier that you started looking at Lake back when it was 3 cents, and you were recommending it back then. I'd like to know 2 things. One, did you see? I guess this increasing super cycle for lithium at that time, or has it surprised you? That's the first part of the question. The second part is, why do you like Lake so much?
I think in terms of surprise, I mean, 2 years ago, I wouldn't call it a total surprise. It's more a question of at what point does demand really sort of start to ramp up quickly, and at what point do you run out of supply? Because that's when you get the sort of the price shock. So that exact point is uncertain. But the fact that supply hasn't been able to keep up with demand, no, that's not a surprise at all. Why Lake? Great projects trading at a great price for investors. Those have to be there. Lake is one of the very few companies globally using direct extraction, right? 20th century technology instead of first century technology in evaporation ponds. So basically the same technology the Romans used to extract salt from seawater. It's high time the lithium industry started using 20th century extraction techniques in my mind. Lake has the technology. All of their product will be high purity lithium carbonate, which is battery grade, and yet the stock is trading at 12% of attributable NPV. So it's very cheap.
We'll talk. I'd like to talk the numbers with you in a moment, but I'll go to Stuart in a second. But excuse my my post-COVID voice. Simon, with this report and where Lake is going, do you think that you talked about the technology direct extraction going forward? Do you think those companies that are doing direct extraction will be much more in demand than, as you say, the old technology, if you like? Yes.
Direct extraction is superior in terms of its environmental footprint, and that will be the way forward for the industry.
So that's the way forward for the industry. Obviously, Stu, you are chairman of Lake Resources. There's been a lot of changes. You've increased the production profile. One of the things before we get into where Lake is going with things at the moment is Argentina as a jurisdiction. Some people do get a little bit concerned about Argentina as a place to do business. I'd like, you've been there, obviously Lake Resources projects are in Argentina. What is it like as a place to do business? And,
Yeah, it's a good question, Kerry, because up until recent times, the production of lithium was split 50-50 almost, plus or minus 1 or 2% between Australia with the hard rock out of Greenbushes predominantly, and a few other players in Western Australia, where they ship hard rock to China, process it, liberate the lithium, and do what they do. And in Argentina, we've had the Atacama in Chile, and then there's other areas in Argentina. And in fact, the last lithium project that came to market over the last 15 years was with Orior, who, mates of ours out of Brisbane, who successfully developed that project through a really tough time in Argentina. And Argentina, we're not apologists for Argentina. It's had a very volatile history, and South America is noted for its volatility, and we're seeing that again at the moment. Right now, Argentina, in fact, is looking quite stable by comparison to some of the other jurisdictions there. And one of the things that we like about Argentina, and we operate and have projects in two jurisdictions within Argentina, the federal government and at a local level, they're very much in favour and giving great assistance to us to develop. They've got a huge opportunity here. I mean, Argentina carries a lot of debt. They borrowed a lot of money from the IMF. They're looking for US dollar denominated export income, and lithium is a great opportunity. They are blessed with masses of lithium projects, and there's a lot of work and a lot of money being spent in country in Argentina at the moment. We're very fortunate with part of our funding that we are funding through the export credit agencies, and that brings some sort of governmental impact as well. So we've got the UKEF and EDC out of Canada. There's a lot of cross conversations going on between embassies and countries and things there. It's really interesting to see. And the government of Argentina particularly is very, very active, and recently had a group of people in London promoting what they're doing in the mining sector and traveling around Europe and looking to attract investment back into Argentina, particularly in and around the lithium space. So it's a lot of good money there and a great opportunity, and they see that, and this is a great opportunity for them within South America.
So there you have it, ladies and gentlemen. There are no issues as far as the chairman of Lake Resources goes in Argentina. In fact, he says it's a great place to work. It's
always going to be volatile, but with what we're seeing, and it's there's the state and the like local areas and the federal, they're both sides, and all sides of politics actually are very committed to assisting the industry. So we're really pleased with the conversations we've been having, and really keen to get on with it down there.
Thanks, Stu. I'm going to come back to you in a moment on Carchi, Stu, but I actually want to talk to the analyst who wrote about Carchi in the report. And in your report, Simon, that you say Carchi is now looking even more compelling after management decided to increase the tonnes per annum from 25,000 to 50,000. What is that? Is that to do with just simply the bottom line? This project is double the size it was a year ago?
It's double the size, and the second half of the production will come on stream more quickly than we were modelling it to before. So I think before, when last June when we wrote on Lake, we had two phases, in the second phase coming on stream a number of years after phase one. Now it's all amalgamated into one project and will ramp up much more quickly. So that 50,000 tonnes comes to market faster than it would have done if it was two separate phase projects. The other thing, of course, is lithium price is higher. So in this note, we've actually raised the forecast for lithium prices to $30,000 a tonne LCE. That might raise some eyebrows. It's almost double the price used in the March 2021 PFS. It's less than half the current Chinese spot market price. It's a reflection of the fact that we've already seen prices run up, and that we believe we're in a lithium supercycle which will last at least a decade. So, and of course that has an interesting impact on valuations as well, of course.
So let's talk about the valuation, Simon, because you've done the numbers. You're an analyst. You've looked at Lake Resources. You've looked at the numbers, the doubling of the production out of Carchi. And by the way, ladies and gentlemen, I believe it's 5 projects, isn't it, Stu? Carchi's just one.
Yeah.
So at the moment, we're just talking about one project. There's another 4 to come on stream later. So What are the numbers looking like for you, Simon, from an investment point of view and that internal rate of return?
So, I mean, the report goes through upgraded numbers for both net present value and earnings. Net present value attributable to Lake is now $5.90 per share. That's about 6 times so higher than the current share price. In markets where you have structural changes in demand, much higher prices than previously anticipated, we expect lithium companies now to be able to make good margins over the next decade or more. You could expect the company to trade at NPV as it gets closer to development. So you have an initial sort of 1-year target now would be 590, but that's pre-production. When you get into production, 50,000 tons per annum, $30,000 per ton, lithium sector trading at about 20 times EV/EBITDA at the moment. Looking at 15 to 25 times, you can see this trading at $12 to $21 a share. But I have to tell you, that's just Carchi.
Exactly.
Lake's aspirational target is to double capacity from Carchi to 100,000 tons. So you'd expect that as drilling of these other projects comes through and other positive developments, that there's plenty of scope to revise those numbers up as projects develop. So people may raise their eyebrows at a 90-cent stock and think $12 to $21, but I don't see those numbers being a stretch at all. They're based on a management stated development target for the project in terms of output, a reasonable assumption based on experience of the Chinese supercycle as to what lithium prices could be and current market multiples.
Simon, before I go back to Stu, how long have you been looking at the lithium as an analyst? How long have you been looking and studying the lithium market, and has it thrown you any curveballs or any surprises? I'd love to just see what your views. I mean, we've already spoken. It's big. It's getting bigger. It's in a super cycle, if you like, only to get stronger. What was your interest initially in covering lithium as a sector? And how big do you think this could get? Not just Lake, I'm talking macro.
I've been looking at lithium and battery materials generally for 5 or 6 years now. I've been a metals analyst for more than 25, but really, the markets were quite small up until you had the sort of previous period of fly-out pricing in lithium a few years ago. And the market kind of overreacted, I think, at that time to a demand-supply equilibrium that hadn't really materialized yet. It has now, clearly, but it hadn't at that time. So that was probably 5 or 6 years ago. How big could it get? I mean, in terms of lithium market by 2035, 2040 could be 5 or 6 million tons. Who knows where prices could be? They might settle at $30,000 a ton. It gives you a sense of how growth in the market might be.
Thanks, Simon. Stu, Simon and I have just been talking about Carchi. You've doubled the production guidance for Carchi alone. Is that the focus of Lake at the moment, just to keep on focused on Carchi until you get that into production? I'd like to know, because Simon has already said that his short-term pricing is about $5.90. Longer term, as you go into production, between $12 to $21 a share, which, as Simon said, my eyes kind of went, really? Sort of a 90-cent, $1 share. I think you've been up to $1.10. When you start talking $21, you I kind of sit back and go, really? It's kind of like a big company and a small company boots, if you like. We're talking just Kachi. Are you focused just on that? What's happening with your other 4 projects? Because that's a whole different ballgame in itself.
Yeah, thanks, Kerry. right now we basically split the teams. We've got a development team that's running. Carchi is a massive project, so it's a huge undertaking and requires a completely different skill set to the exploration and development side of the business. So we've actually got a team, and we're bringing in more and more people quite regularly now as part of the Kachi development team, working closely with Hatch, who are running the DFS, and obviously overseen by the board as we move in that direction. But we've also pulled a lot of the original guys who did the initial work on Carchi, have sent them off, and we've committed and we've budgeted in our budget. We've allocated $15 million this year across exploration and development and test work on 3 other brine projects in and around the Hui area. So we've got the Orior program where we're currently drilling. We've got a project called Carchi, which sits right alongside Lithium America, which is in joint venture with Ganfeng. And those guys are building their project there at the moment, and they've got a massive project. They're talking of producing 40 to 60,000 tonnes a year. We've got a lease area right alongside their areas. And on the other side of the basin at Orior, we have a large lease area that runs right alongside the Allchem area, which used to be the old Oricobre ground. And so we're drilling there now. And we anticipate drilling, we've got a program currently of 10 holes that's live, but we anticipate drilling right through the year and obviously expanding that program as and when we need to. But in the meantime, we will take those brines as we're drilling and test those for a variety of different direct extraction processes and other processes that we've been exploring and investigating over the last 3 to 4 years. So yeah, it's a really exciting time because, as you know, in this space where you've got a massive deficit in supply, there's an opportunity to deliver that into that deficit. And one thing that ion exchange and direct extraction can deliver is a rapid move into production. It can happen very quickly. We don't have to build evaporation ponds and let the brine start to evaporate. We don't have to build bigger and deeper holes in Western Australia and then ship to China to liberate the lithium. We can do it there and there. And our hope is that we can do that quite rapidly. And we've got a lot of very positive discussions underway with financiers and off-takers in assisting with those developments across the 3 new projects, and they're running in parallel with the rapid move towards production with Carchi. And we look to have the final investment decision on Carchi later in this year, and as well as construction commencing. So, and we're pretty confident we'll have some off-take news in the next little while as well. There's a lot of interest, and a lot of interest came in pretty hard when we announced we were going from 25 to 50,000, because one thing we're seeing out there is a lot of interest and concern in security of supply of the battery raw materials. It's not just lithium. I keep saying this. We're just a small part of the battery industry, but lithium is a prime product, and the people who are in North America who've been late to the party, the Europeans who came in earlier than the North Americans, and they're well funded by the EU, and they've got a lot of subsidies and a lot of money to build out their supply chains. People are trying to build these supply chains that aren't reliant on China. And we're seeing that, and that's creating a great opportunity for us and the discussions we're having. So I'm hoping at some point in the next little while, we'll have, certainly before the DFS is out, we'll have some pretty positive news. I've
got to bring this one up, and it's kind of a question for both of you. Lilac Technologies, who help with the direct extraction process, if you like, they now own 25% of the project. Now, some people out there have said you gave away too much of the baby at that stage. To those people that are looking at this and saying, could you have kept 100%? Stu, to you, I'd ask, what your thoughts are around that, a little bit of criticism around that deal with Lilac, and then I'll go to Simon.
Yeah. Well, I mean, just to correct you on one point, they currently don't own 25%. They have the right to earn up to 25%. And to earn that 25%, they've got to deliver. They've already paid for at their cost the pilot plant that was operating in Oakland. And for that, they would have achieved a 10% stake in the Carchi project, not Lake. And then on the successful completion of the demonstration plant, and we hope to have news on that in the near future, that has to produce certain volumes at certain spec. That will allow them to claim a further 10%. And then there's an additional 5% on the introduction of a qualified off-taker.
Right.
Qualifies using the spec from the production from the demonstration plant. So we didn't just give it to them. And then the other thing that people seem to forget when they're beating us up for that transaction is that Lilac have also then committed to commit their equity component of the 25% that they will own in part of the funding to bring this project into production. Now, when we announced the transaction, that was up to 50 million, but bear in mind we have subsequently doubled the DFS numbers to 50,000 tonnes. So the capex requirement may be, or you would expect it will be larger. So their contribution may be larger. So, yeah, to those people who think we gave it away and we gave them a free swing, well, that's great. That's actually not the case. And they have developed and provided a lot of work over the last 4 years that we've been working with them, and will continue to work with us through the life of that project. And with that, there was the exclusivity that we acquired around certain areas in Argentina where people can't use the Lilac process, and their ongoing financial commitment to the equity component. So it wasn't just a gimme.
I guess I was just saying what the market was thinking.
I understand that.
So
we make that a lot, but the problem is the allegation is actually incorrect.
Well, that's why we like to clear these things up, Stu.
Happy to do so. Thanks, Kerry.
Simon, do you see, when you were looking at the project and Lilac came on board, was that a strength to what you're looking at in terms of the investment thesis for Lake Resources?
Lilac provides the technology. Right? I mean, Lilac is a technology partner. Lake and Lilac Solutions are hand in hand on the project, necessarily.
But I guess what I'm saying is you've been following it since it was 3 cents. That was before, I believe that was before Lilac came on board. Has that? It was
before the transaction with Lilac was finalised, but Lilac has been on board since pretty much since the beginning of the project, or since the very early days of the project. So Lake was working with Lilac maybe 4 years already, as Stu says. So I mean, that transaction was a long time in the making, but they've been partners on the project for a number of years.
Mm.
With this report that you've done, it's quite extensive. And if people would like to get a copy of the report, Stu, how do they get a copy? Because I haven't read the whole report because it's only just come out. How can people?
On our website, Kerry, it'll be on our website, and we will have sent it out. Anyone on our database will have received it, but certainly lakeresources.com.au. It'll be there, and I think we're trying to put a pop-up on the front page of our website.
Well, as I say, I haven't had a chance to read the whole thing, but Simon, I just say thank you for such an extensive report, because it really does go into detail, not just Lake Resources, but the whole market and the ESG component, and the fact that Lake are doing this direct extraction, which is so important. I'm going to finish with you, Simon, if I could. Earlier on, you said share price $5.90 in the short term, eye-wateringly 12 to 21 in the longer term. I'll be interested to come back and have you on the program as we go further down the track. But it's an investor audience out there. I'm going to leave the last word to you. Lake Resources, the benefit to investors and the growth. What are your final comments?
I mean, the benefits to investors are to be exposed to one of the very few companies globally which is using direct extraction in the lithium sector, in a company that has phenomenal growth prospects over the next 5 or so years as Carchi comes on, and as they develop the other projects in the stable. So.
Well, there you have it, ladies and gentlemen. They're only just getting started. The research report, and it is extensive, by Simon Francis from Orior Capital out of Hong Kong. It is on their website right now. I would urge you to download it, to read it. And even if you don't want to fully understand Lake Resources, it's got such a lot of information about the lithium market and what's going on. As we said before, Lake Resources are developing Carchi, but they have 4 other projects, and the valuation of the projects themselves, who knows where it's going to go, but it's a very interesting report. Simon Francis, really good to see you. Thanks for joining me on Small Caps today. Chairman of Lake Resources, Stu Crow, good to see you. All the best with the project. The sun looks like it's just shining on the side of your face at the moment. So I'm sure it will keep shining on Lake Resources. Come back and let us know as you get closer to production.
Good on you, Kerry. Thank you.